Yo, what is good, ITF Mob? It is your boy Booba back with another video. And today we have another market analysis for the week. So we're gonna hop right into it. Honestly, uh, based off of last week's movement, I didn't really mess with the charts too much because looking at it, there was a good amount of movement, but it was movement going both ways. So this week I'm gonna try to decipher more based off of the movement of last week. So starting from top down, we're gonna start from the monthly. Again, we still have our high frame candles. So in our situation, we have a weekly high, weekly low, price is trapped. If we work our way down, we'll find that last week we had a candle that tried to buy up but couldn't buy up, and then the sellers took back control going into this week. So we had a situation where last week we opened down here, price shot down, then tested the swing low, bounced off the swing low, shot back up, retested this peak high of this candle of the previous week, and then now we had the selling that happened to end off the week. So we basically had, like I said, movement going both ways, which caused the market not to really break out to either one side, buy or sell. So for me, if I'm watching this, I'm going to keep a close eye on how price plays down in this zone, because we can see by the weekly low, price is wicking off of it, and price does look like it wants to continue to sell. As far as this week, my focus will be scalping. So you may see me use different tools and different indicators to try to get on those lower frames to try to recover and pass my 100K. But I'm in a position where my equity is low on it, but I'm just continuously doing the math and finding high probable positions to be able to try to recover the account. So this week, again, I will be trading more aggressively, because again, when I start the test at the top of the test, I like to trade swing moves or long-term positions, either whether that be intraday or swinging, because what tends to happen is those moves are more likely to play out and hit the 3% mark. But during the summer, markets aren't always guaranteed to play out full trends. So when it comes to scalping, you do have a higher odds of making more money. So whenever I do my testing, I first try intraday to swing. If that pans out, then usually I can pass within a good amount of time. If it doesn't, like right now, I have like 5 more days, which right now is the 10th of July. So after these next 5 days, that's when that test will be due. And this is around the time I'll start to get aggressive if I'm not in position to pass, which is totally okay, because again, with financing and figuring out test pacing, you can definitely continuously keep trying at these funding tests. If you feel like you're not confident at them, I would definitely recommend doing demos or practice tests first, until you get the hang of just the pacing of the market. So right now, we're going to drop to the low frame. But before we do that, again, we're going to start trapping our previous weekly candles. So we can see all of our TP zones are pretty much the same. We don't have to tamper with that too much. But these little green boxes here that are marking our peak weekly high and peak weekly lows down here, we're going to move it to this candle. Okay. So this is the new candle in charge. Okay. So we're just going to watch it. Keep it real simple. Okay. And keep in mind, whenever we put this rectangle up, what I like to do is have the peak of the candle trapped within it, so we know once price breaks out. Okay, so it has to be this and probably this right here. Yep, that makes the most sense. Okay, so this is the zone that we moved in between this week and last week. It was a sell-off, 1, 2, 3, 4, 5, 6, 7. So it was this huge sell, price bought up in the next day. Oh, sold, but tested the low, came back and bought up, closed by the end of the day, by the end of the 24 hours. This is where the next candle opened, shot up and tested, couldn't break this high. Price failed, dropped all the way back down. Price hit the swing low, failed to break down there somewhere, bought back up by the end of the day. 4 o'clock price close. We had the next open, where price then continued to try to buy up from the previous close when buyers coming back in control, because this huge wick right here is all these wicks are information. So this is just telling you again, by the end of this candle close, which is back up here, there was a bunch of buyers that were taking back control over that selling pressure. So that's the only reason why you have a tail here. That's why it swung right into this, but it didn't go up to test any of the high or the peak highs, because it just didn't have enough momentum. So by the end of it, the sellers were back in control and then push price to close just a little bit below where they opened. So now you had a situation where this opens, test this low, buy it up, closes here, opens here, sells down first, then a bunch of buyers come in, price spikes high, couldn't break this previous high back here, and then closes down here. Sellers get back in control, and this is where we are now. So if I'm on the 4-hour, there should be selling going on because we had the test already happen. We had the fake out of our daily candle. And again, I told you guys, I'm going to probably be trading more aggressive this week. So I'm going to be using like the 5-minute pair and just, excuse me, I was just burping. But yeah, I'm going to be trading the 5-minute pair and just using a lot of these lower frame candles to map out what's going to happen here. So I'm going to be applying that same thing, that same way I was just reading the candles onto the 4-hour, the 1-hour, and then the 15. And then my 5 is ultimately going to be where I enter. So if I go back up to the daily here, we already have price trapped. We can go down to our 4-hour to identify our swing high and our swing low. So that way we have our anchor points. Once we have the anchor points, so swing high is cool because remember, right? From last week, price shot down and wiped out this low, which was a swing low at the time, right? And once price wiped it out, created this peak, and price has yet to break on both sides. So we know this is just one huge range that's going on, which means that we can also just kind of play this whole position by ear to kind of wait for things to pan out. So if it's me, I'm going to keep my swing high here. I'm going to keep everything the same. That's why I didn't delete too much. But if I'm going to do anything, let's mark new liquidity zones. So that way we have new price targets. So move all that out the way. Okay. Yeah, so something interesting, right, that I noticed is that if you were to put your support and resistance at the top of the candle bodies, and you were trying to look for your signals of when price is going to break your wicks, this won't hurt to do, because what will tend to happen is when price closes past it and you're at the body, right? A lot of times your signal will actually reveal itself above the line. So for example, price broke out here. And then it just, when it came back towards this line, you can see this was just a signal entry because it was resting on top of this zone. Granted, it didn't come back that close because, like I said, you can normally put at the top of your wicks, wait for your wicks to break, and then that's a more clear-cut entry, right? But in this case, if I were to go back down, hold on, around here, right? And then we can drop to maybe the 1 minute, you'll probably see something weird where it's like price was just resting on top of the line at a point after it broke out. Probably this zone right here is just resting. So it didn't even come back. So after the breakout, you can see this was the high low. This is our low. This is our high. This is our high low. And you could have just entered right there, just off the strength of knowing that that's already heading towards breaking your wick. So hold on, let's drop back down to the 1 minute, or excuse me, the 1 hour, and then keep doing these zones. But I just wanted to point that out because I noticed that today, like I like to watch a lot of other traders too, because there's never in the trading industry, it's not like you can never learn anything new. There's always information you can like apply and add to what you know already. But it just comes down to how you use it. So for most people, once they figure out what their bread and butter is, they don't really want to get involved with too many other things, because too many strategies is not good too. And then you can start to confuse yourself. So what I'm doing here is I dropped to the 15-minute to find better zones, but this consolidation is pretty ugly. I ain't even gonna lie to you. Like this is, excuse me, but this consolidation is trash. I'm not gonna lie. If I'm looking at this is just one of the markets I need to see clarity. And honestly, I would just put this in a channel, because it's too hard to decipher. Even if I use horizontal positions, like this area could be a zone of liquidity that price will eventually come back to wipe out. So if I go back down to the hour, it's not going to look pretty, but it is there, right? Okay, so the breakout happened right here at this high. Okay, so here, I'll give you another example. So check this out. You had a situation here where you could have put your line right here, and notice right after price closed right above it, okay, price closed right above it, breaks it, and then there was a strong retest, but when price came back to close above, that could have been your confirmation. And honestly, that spike is actually news. And that's why that happened. But it's just that weird thing of like, after the break happens at the top of the line, just wait for price to rest back above this line before you enter. Because if it rests above, then that's your clear entry. Kind of like this. Went up, came back, and it rested. It didn't continue down. So same concept here. That's honestly what I'll be doing. And I'm going to be taking a lot of 2-to-1 setups this week, just to try to like close out a lot more profits. But yeah, like I said, this is one I'll put in the channel. I actually wouldn't even try to break down the liquidity on this unless you're getting down into scalping. But again, I am, so I'm gonna you're gonna probably see a lot of detail on most of my candles a little bit later on. And then I'm just gonna play this by ear. So right here, based off where that 1 hour is, I already see kind of the setup right here. Okay. So price broke out from here, came back, and this looks like the test to me. It's gone to the 5-minute. Okay. And then I'll probably do that right there. Okay. So that's the setup right there that I see that could play out there. And then let's see, going to the daily. So yeah. So we know at 4 o'clock today, we started off right here, and all we've been doing is selling since 4. So price could bottom out, price could go a little bit lower, price could come to this line and then bounce. And then by the morning, we could be back up to the upside, or it could break out. And then we could be seeing ourselves get a retest to enter down to our swing low. So now we'll go on to GU, and then we'll just speed through this one here. So again, all my lines as far as the high frames are there. We're just going to move our green boxes to the previous week candle. So this was our previous week candle. This was the week before. And now we have price trapped, so we can work our way down. We know today price open selling off. So this could be the fake move direction. I like to capture all that in there, make sure the ends are good. All right. Drop to the 4 hour. I kept the points of interest because, again, like on the monthly candle, I still do see structure looking like it wants to go fill these wicks. So, we just have to wait and see what's going to happen there. But this could all just consolidate up until that happens. So in the meantime, I'm going to try to capitalize going both ways on the charts, buying and selling. I'm not really looking for a bias here. And again, this kind of looks like it's channeling. So we're going to play this by ear. And I'm going to play both sides of the market until something clear reveals itself. Okay, so now we have that. In this situation, like with AU, I was able to keep the anchor, the swing low and the swing high. So I was able to keep that all the same. See that here, right here. Okay. But on GU, we're gonna have to actually add it. So if I go to GU, our swing low right now is here. Swing high was here. Price came back up, got wiped out. When it got wiped out, it was from this low here. So our swing low was here. Our swing high was here. Yep. And then after that, price got wiped out again. Our swing low was here. Swing high was here. Then price came out, wiped out the swing low. So this is our swing high. So just see how I was just breaking that down. And yeah, it could be falsified as like it's a internal break of structure. But the reason why I'm not considering it an internal break of structure coming off this big move is because this big move created this swing low. It didn't create this swing low. This was the high that ended up making this swing low. So when this high became the anchor point that created this, now the anchor point started to get easily shifted around once it started breaking to the upside in this situation. So from this swing high, because this is the last low that wiped out this swing high, now we have this situation, and now we have price trapped again. So we can just play it by ear. And again, I'm looking for 2-to-1 setups, and I'm going to be pretty aggressive on my entries. So you're going to be watching out for those. 5 minutes. Okay, so I like to get any zone that may have been a consolidation zone. Just a good way to start. There you go. Okay. Boom, there you go. Yeah, I know I haven't been making these all liquidity lines, but I'm gonna go through them later. But yeah, so if it's me, I'm looking at the 4-hour confluence here. This looks like this candle is in selling, in the middle of selling. Remember at 8 o'clock, this opens up here. For the last hour to 2 hours, we've been selling down. And you can see it's been overbought on the RSI, the stochastic. So that's just more confluence for me. If I go down to the 2 hour, it just looks like a double top. If I go down to the 1 hour, it just looks like this candle just got done pulling back. And then on the 15-minute, we have price trying to pull up, and then we get this bearish engulfing. So again, this could be a valid sell entry. I can do a 2-to-1 like that. Okay, so same type of sell energy. We just got to see what's up. See if the markets are actually going to play that out. AJ, we're going to go from the monthly again. See what's up. So it looks like this monthly started off selling, and now it looks like it's trying to push for the buys. Let's see what the weekly is looking like. The weekly almost looks like a bullish engulfing, but we don't know yet, because if this week starts off and it doesn't break this, then we know for a fact we're good for some sells going into the middle of tomorrow. So we're going to move those green boxes like usual, go down to the daily. We have our points of interest still. We do see here on the daily, we had our peak low set. The peak low is set, and then price seems to be closing back above it. So we had a low. Price close above it here. Trying to break structure, and then price is trying to go up. If it wipes this out right here, and price comes back and rests above it, it is 2. we should see price get out of there and probably go to our TP1 to the upside. So that's one way to look at it. But again, that's like long term. So me, I'm going to be playing around with these candles on the inside. So we'll drop down to the 4 hour. We'll go ahead and actually clean up here a little bit. Okay, so move those. That's, we'll keep the point of interest, take these zones of liquidity off. That was for last week. Okay, and then we'll go down to 1 hour. Okay, man. So we see already we're getting like a breakout to the upside here. Looking like it's trending upwards, trying to build pressure to break out, to break our previous high. And then right here, so we had our high, low. I'm trying to find our swing. So our swing low looks like it's down here. The swing high was back up here. It got wiped out when price came and took it out here. This is our swing low that led to this high breaking. So this swing high came back, couldn't break this, but created this swing low, which looks like it might try to come back to break this. So our true swing low right now is right here for the time being. Okay, that's one of our anchor points. Other swing high is right here. Only reason why this is an established swing high is because it closed just shy above before reversing, which caused the official break, but then it failed by retracing. So boom and boom. So these just seem like big consolidation zones. And again, this could just mean that the high frame is trying to make a bigger move. So this is also, in a way, another channel, just on a bigger scale. Kind of like this. Kind of like that. And then we have the breakout of the channel happening here. It's like a huge bull flag. And then this could wipe out all this liquidity to the left here. But there's no guarantees. So in the meantime, just play it by ear. So remember, I like to get the double tops with my liquidity zones and double bottoms. And then just trap price. You'll see where it broke out. So we got our swing high, or not even our liquidity top here, liquidity bottom. Okay. And honestly, the big frame channel, I'm not going to just keep there. I'm going to use the horizontal zones and the points of interest to keep track of all that. But as far as that, like, this is one of those ones where we have to see if price is going to respect the top of this breakout. So if I go down the 15-minute, it's looking like it wants to fall back in. If I go to the 5-minute, same deal. So we just have to see if it respects. If it respects this, then we can say it's safe to buy. But let's jump back up to the 4 hour real quick for more clarity. Yeah, it just looks like it wants to buy up. So I'm gonna leave that alone and just kind of wait for more clarity around this line. And then going down to GJ, looks like the same scenarios going down, but we'll start from the weekly. So again, we'll move our green box lines to the current weekly's peak high and peak low, so we know where we are in the chart. I like to work our way down the frame. This is our daily candle we're in right now. So price sold off first and is now having buyers in control. Okay, now we have, this is our high, this is our peak low, our 4 hour. And in the moment, our swing high, it's probably gonna be here. Swing low is gonna most likely be here. It's easier to paraphrase it with the 4-hour. It's just less noise, and then you'll know what's going on. So you'll see this is the peak low. It led to this high breaking, which created this. And now we have the situation of, funny enough, you could actually even mark this as a swing low because it didn't even break until price came back first, set this low, and then broke. So yeah, you could actually mark this. And then price is coming back. So this is like one of those times where you definitely, around reversal zones, you want to use more channels because it shows you the market shifting from one way to the next. So like, for example, price was uptrending. This channel was going to help you show that it's going to pivot based off how it's breaking. So it was buying up, creating the uptrend, right? Creating the uptrend. And then as it started to fail, we know the shift was happening. And that's how the breakout signifies, you know, price going the other direction. So likewise with that, this could also be another large channel, if you may, where price is just building up. And then you can kind of keep playing within the lines with your swing high and swing low anchors to just trail price up. I'm not doing a lot of liquidity zones right now because, as you can see, prices in a way, like, yeah, you can find some areas, but it's so like I say again, it's easier to use the diagonal channels to just see what's happening when it comes to reversals versus a trending. Because if price is trending, it's easy for the horizontal buildup to be spotted. So hold on a second. Yeah, see. Okay. So it looks like UJ actually took off earlier than AJ and GJ, which gives some good sign that GJ and AJ might still be buys. So again, we're gonna move our blue lines, our green lines to the top and bottom peak of the previous weekly candle. We're gonna drop to the daily, and the daily you can already see broke out of the top of the weekly. So this is showing us that now our higher frames want to kick in. And we can actually get rid of this point of interest because chances are we're not coming back to that. We'll drop to our 8-hour, or our 4-hour. And then here, I'm going to clean up and brush up these old liquidity zones here. All right. So we see we hit TP1. If I were to drop to the 1-hour, I know my swing low is down here. Okay. You know, our swing low is here. We know our swing high is up here. We have price pulling back from the swing high. So on like the 5-minute, this wouldn't be a invalid. This would be a valid sell setup. I would take this down. Okay, kind of like that. So I'm using low lot sizes because, again, like I said, I'm just trying to recover the account. So using low sizes and having clear confirmation for me is what I'm gonna be doing, because if I see, okay, this is a bearish engulfing, chances of price continuing is high in favor. We see the structure breaking down. And then if price comes at least near here, I can secure it at break even. And if it plays out, that's 2% or 2% recovery at a low risk amount. So if I were to risk if I risk 0.5 with 100K, I'm risking $500. If I risk 0.25, I'm risking $250. So if I risk 0.5, I'm risking $50 for a return of for a return of 100. And from there, I'm incrementally increasing that risk amount as the 2-to-1s continue to win. If they don't, I would hope that at least price was at break even before I got stopped out. So that is the last pair so far. We'll just play the rest by ear for the rest of the week. I'm gonna try to be real sharp on catching as many moves as I can, because again, I really want to get this test done. Like it's not the end of the world if I don't. I still have another one coming on the way, so for me, it's just a matter of getting it done so I don't have to worry about it and go through the ropes again. So again, I hope you guys did enjoy the content. Please leave any feedback in the comment section so I know what to change, or what to update, or what I could do to enhance the viewing experience. As far as the Real Rise Academy, I know I haven't been very involved with it at the moment. It's just because I've been trying to focus on the test and kind of been looking into an apartment situation so that when I get set up, I can go really focal into that side of things. Because what I want to do is eventually start streaming some live trading sessions on just kind of how I approach my sessions and how you guys can break down and find your setups. So for me, it's just going to come down to just kind of upgrading the viewer experience over time so that you guys can actually enjoy this content. It's not just long and dragged out. I want y'all to actually enjoy this. But at the same time, with the lives, what I'm going for is for a more interactive experience. So that way you guys feel more engaged and can actually ask me questions up front, and then I can break things down in depth. So again, if you guys could like, comment, subscribe, and share this video, that would be greatly appreciated. I hope you guys have a great week, and I will see you guys on Friday. Peace out.